Okay. In the previous session, we were talking about when the markets are efficient. We discussed that the markets are efficient whenever all the available information are incorporated into the price of the shares. So Azam has joined us. Azam, आप बताइए कि how likely it is to have an efficient market in the real world. Like say for example, what kind of efficiency you observe in the markets? Like say for example, as far as this definition of the efficiency is concerned, we actually were talking about that the information that actually are that have to come already actually have arrived in the market, and if the prices actually have to rise, they already have risen, and if the prices have to fall, they have already fallen. So what actually is the what do you think, what actually the real markets look like? Is there a possibility that we have got financial markets efficient in the real world, or say for example in Pakistan?
Sir, thank you very much. But especially in Pakistan, we don't have a real market, as far as my experience.
And from our discussion is that generally the markets are not efficient, but there are still beliefs about the market's efficiency. But what happens when you actually have got the efficient market? So this equation basically tells you that your optimal forecast returns are actually such which are exactly equal to your equilibrium return. So your equilibrium return, the return that you get through the demand and supply of the forces, through demand supply forces, it is that equilibrium that is basically the optimal forecast returns. And this optimal forecast return is basically the optimal forecast that basically you have made. And this optimal forecast, or any forecast that you make in the market, or any expectations that you form, actually depend on the information that you have. And if that information is perfect, your forecast will be perfect, and your market will actually have got the same equilibrium returns which actually were you forecasting. So, but you might have surprises if your information level is different. Like say for example, you have got less or more information available, that might surprise you, that might cause you trouble, because like in that particular kind of a situation, you might have a situation where you can actually be surprised by the happenings in the market. Like sometimes you get a positive surprise, sometimes you get a negative surprise. In both of the instances, you might be in a situation where you basically have got a kind of an unexpected gains or unexpected losses that you might have. So financial economists states it more simply: a securities price fully reflect all available information in an efficient market. So if an efficient market exists, the securities traded in the market actually reflect all available information in that market. So that is what basically we actually have been learning from it. Now, what this efficient market hypothesis tells further, that not only this situation will be reached in the market, but this situation has got the ability to bounce back if the situation changes. Like say, for example, if the markets are efficient, but somehow, if the markets in the market, what happens? That the optimal forecast returns are more than equilibrium return. If the optimal forecast returns are more than equilibrium return, what will happen in the market? What will happen in the market? अगर आपके ऑप्टिमल फोरकास्ट रिटर्न ज्यादा हैं और आपके इक्विलिब्रियम रिटर्न कम है, तो मार्केट में क्या होगा? If people are expecting to get high returns, but actual return in the markets are low, the people will demand the assets. If the people demand more shares, if the people demand more financial assets, due to increase in their demand, their price will increase. And when the price of any bond or any share increases, it actually squeezes the difference between the current price and the future price. अगर करंट प्राइस बढ़ते हैं तो फ्यूचर प्राइस और करंट प्राइस का मार्जिन जो है वो कम होता है, और वो मार्जिन कम होने की वजह से ऑप्टिमल फोरकास्ट रिटर्न कम होते रहते हैं, और उस वक्त तक कम होते रहेंगे जब तक ऑप्टिमल फोरकास्ट रिटर्न और इक्विलिब्रियम रिटर्न बराबर ना हो जाए. In the similar situation, if the optimal forecast returns are less than market equilibrium return, अगर आपके ऑप्टिमल फोरकास्ट रिटर्न कम है और मार्केट इक्विलिब्रियम रिटर्न ज्यादा है, तो ऐसी सूरत में लोग शेयर्स को सेल करेंगे। जब लोग शेयर्स को सेल करेंगे तो उनके प्राइसेस नीचे जाएंगे, और जब उनके प्राइसेस नीचे जाएंगे तो देयर कुड बी अ ह्यूज डिफरेंस बिटवीन द करंट प्राइस and the future price that you might expect in the future, because the capital gain depend on the PT plus 1 minus PT. If the PT falls and the PT plus 1 might actually be remaining the same, the difference between the PT and PT plus 1 increases, and that basically, like increases the returns, optimal forecast returns, and the optimal forecast return will keep rising up to the point where the optimal forecast return are equal to the equilibrium return. So what actually is the major hypothesis of this particular financial market, efficient market, my efficient market hypothesis is that whenever you have got unexploited profits, unexploited profits का मतलब क्या होता है? जिस तरह मिसाल ऑप्टिमल फोरकास्ट रिटर्न ज्यादा है, इक्विलिब्रियम रिटर्न कम है, तो you have got positive profit opportunities present in the market. All unexploited profit opportunities eliminated, efficient market condition holds even if there are uninformed, irrational participants in the market. Because that is a kind of that is what basically they assume, that it is a kind of a market phenomenon, because when the new information comes, sometimes actually it incorporates very quickly in the market. So the point comes when all the information that actually come in the market is incorporated into the price of that particular shares. Does it make sense to you people? आप लोगों के लिए बात सेंस बनाती है भाई? रैशनल का मतलब है कि what actually has made us believe that this kind of hypothesis exists. What is the basic idea behind the hypothesis? In an efficient market, all unexploited profit opportunities will be eliminated. जो स्टेटमेंट है वो ये है कि एफिशिएंट मार्केट ऐसी मार्केट होती है जिसमें सारे अनएक्सप्लॉइटेड प्रॉफिट्स और अनएक्सपेक्टेड लॉसेस एलिमिनेट हो जाते हैं एक टाइम पर। ये किस वक्त एलिमिनेट होते हैं? ये उस वक्त एलिमिनेट होते हैं जब आपके पास ऑप्टिमल फोरकास्ट रिटर्न इक्विलिब्रियम रिटर्न के बराबर हो। अगर ऑप्टिमल फोरकास्ट रिटर्न ज्यादा है इक्विलिब्रियम रिटर्न से, तो इसका मतलब है कि प्रॉफिट अपॉर्चुनिटी है। आई एम सॉरी। और अगर ऑप्टिमल फोरकास्ट रिटर्न कम है आपके इक्विलिब्रियम रिटर्न से, तो इसका मतलब ये होता है कि आपके पास एक्सपेक्टेड लॉसेस हैं और ये भी रिकवर हो जाते हैं, लेकिन एट द सेम टाइम एंड द मार्केट मैकेनिज्म इज सच दैट एक्चुअली bring or bridges the gap between the optimal forecast return and actual return, because whenever you have got more, actually you're expecting more returns and you are getting less returns, you will be actually, due to your expectations of higher return, you will be demanding more assets. If you demand more assets, the increase in the demand of the assets increases the price of the asset. And whenever the PT increases, the difference between the PT plus 1 and PT actually decreases. So when this decreases, the optimal forecast returns fall, actually, the falls basically, and that fall in the expected returns actually, causes the gap between the OF, ROF and R star actually lower. And this keeps happening to the point where this ROF actually becomes R star. Optimal forecast return become equal to the equilibrium return. Knowing that people would buy more securities, which would in turn up the current prices and lowering the profit, when the current price had risen sufficiently and optimal forecast of the return will be same as equilibrium return, the efficient market condition is satisfied, the buying of the securities will stop. When people stop buying further assets, they will only stop at the point when the unexploited profit opportunities actually are gone. Okay, so if you look at further into the rationale behind the hypothesis, an extremely important factor in this reasoning is that not everyone in a financial market must be well informed, but somehow, again, I was telling to the students of the other class when I was teaching the same topic, when we were doing MSc in finance, in economics, we did a research, and that research was about that whether the insider trading makes market efficient. The idea is, देखिए पूरी दुनिया में जो insider trading है वो banned है. Insider trading का मतलब ये होता है कि the people who belong to the company cannot trade in the shares of that company. इस तरह मिसाल के तौर पर अगर कराची यूनिवर्सिटी एक पब्लिक लिस्टेड कंपनी हो और मैं चूंकि कराची यूनिवर्सिटी में काम करता हूँ, तो मुझे कराची यूनिवर्सिटी के शेयर्स की ट्रेडिंग की परमिशन नहीं होगी. Why not? Why not, Azam?
सर वो तो फिर जाहिर बात है कॉन्फ्लिक्ट ऑफ इंटरेस्ट की बात आ जाएगी.
किसके इंटरेस्ट की बात आ जाएगी?
कॉन्फ्लिक्ट ऑफ इंटरेस्ट है ना उसमें. तो
जी,
वो
कॉन्फ्लिक्ट ऑफ.
अगर तो वो तो अगर खुद ही अगर अपनी कंपनी में काम करेंगे तो वो तो फिर अगर मैं अपनी सनराइज को लिस्ट करा के उसी में खुद काम करूं तो फिर उससे ज्यादा इन्फॉर्मेशन किसके पास है.
That's what actually is the problem. Yes. So since you have got a lot more information than other people do, because like say for example, if I am actually working in the finance department of Karachi University, and I'll be knowing every in and out of the financial market, financial position of the company, and that information will not be available to everyone, and everybody will not be able to decide about the markets, like about the buying or selling of the shares correctly, because they don't have got the correct information, or they don't have got the full information. All right. So but like can this agar aapka kya khayal hai, आप सब लोगों का और including Azam of course, कि अगर insider trading allow की जाए, तो how that will affect the efficiency of the market on the pure technical grounds?
सर 100% अफेक्ट करेगी टेक्निकल ग्राउंड्स के ऊपर और वो कोई सेंस नहीं बनता. लेकिन मैं आपको आपने ये बात अभी डिस्कस की है तो मैं चले आपको एक्सपीरियंस के लिए भी एक चीज शेयर कर दूं. अपना 20 साल का एक्सपीरियंस आपको मैं एक इनडायरेक्टली एक तो आपने डायरेक्ट बताया कि इनसाइडर ट्रेडिंग आप चाहते हैं अलाउ. एक मैं आपको इनडायरेक्ट इनसाइडर ट्रेडिंग का तरीका बताता हूँ.
बताइए.
वो भी उस पर भी आपको डिस्कस करना चाहिए और उस पर भी बात करनी चाहिए. थीसिस होना चाहिए. मैंने कभी लिस्ट करी. मैं अपनी कंपनी में काम नहीं कर सकता ना. कोड ऑफ कंडक्ट है और वो लॉस के खिलाफ है और वो एससीसीपी रेगुलेशन के खिलाफ है. लेकिन मैं अपनी कंपनी की इंफॉर्मेशन आपको दे सकता हूँ. आपने कराची स्टॉक एक्सचेंज आपने सॉरी कराची यूनिवर्सिटी को लिस्टेड करा रखा है आपने एंड यू आर द सीएफओ ऑफ द कंपनी. आप मेरी कंपनी में इन्वेस्ट कर सकते हैं. वो कोई रूल पे पाबंदी नहीं है ना. 10% से ज्यादा आप मेरी होल्डिंग ले नहीं सकते. ये रूल के ऊपर पाबंदी है पाकिस्तान के अंदर.
सही.
एक 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 कंपनी या एक इंडिविजुअल 10. लेकिन आप मेरी कंपनी में काम कर सकते हैं. मैं आपकी कंपनी में काम कर सकता हूँ. तो यू स्क्रैच माई बैक एंड आई स्क्रैच योर बैक.
हाँ, ये तो बेसिकली जाहिर है, ये तो होता ही होगा ना, बेसिकली जाहिर है.
हाँ तो दिस इज द सेकंड स्टेप ऑफ इनसाइडर ट्रेडिंग which is never been discussed and never been considered
नहीं
कि
एक्चुअली,
ये
हाँ बिल्कुल
ऐसे
आपकी बात
प्रॉफिट
बिल्कुल
कैसे
दुरुस्त है.
बढ़ते हैं. यूबीएल का प्रॉफिट इतना बढ़ रहा है. हबीब बैंक का प्रॉफिट भी इतना बढ़ रहा है और डीजी खान का प्रॉफिट इतना बढ़ रहा है. लकी सीमेंट का प्रॉफिट इतना बढ़ रहा है. तो बेसिकली दे आर डूइंग द सेम थिंग. दे कांट ट्रेड इन देयर ओन शेयर्स एंड वो कोड ऑफ कंडक्ट के खिलाफ है. वो रूल्स के खिलाफ है. बट दे कैन इन्वेस्ट इन द ऑल्टरनेट इन द अदर कंपनीज. मतलब डीजी खान लकी सीमेंट में इन्वेस्ट कर सकता है. लकी सीमेंट इज शेयरिंग द फाइनेंशियल्स विद डीजी खान. डीजी खान इज शेयरिंग द फाइनेंशियल विद द लकी ग्रुप. सो बोथ आर मेकिंग बिलियंस ऑफ रुपीस.
बिल्कुल सही कह रहे हैं आप, बिल्कुल सही कह रहे हैं आप. दैट्स व्हाट बेसिकली हैपेंस. और यही वो बेसिकली जाहिर है, जिस तरह अभी आप बात कर रहे थे कि जिस तरह ये जो बड़े ब्रोकरेज हाउसेज हैं, they basically have got more information than other people, and that's what the way they actually get those information from the people, basically, because again, yeah, like I scratch like your back and you actually scratch my back, so that's what basically happens. So that is what basically like is the situation. But agar insider trading आप allow करें, तो efficiency market की बढ़ेगी, in the sense because they will bring the new information to the market, and that information will of course incorporate into the prices, and the more like you will be allowing these people, because the more information will come in the market, because they will not be actually going like against the market, or sometimes basically like they will not be perhaps like they will be bringing new information to the market. So that is what something was the idea basically when we were doing this kind of research. So again, financial markets are structured so that many participants can play, as long as few smart money bet or investors, like there's something you can actually read about this. So we have to talk about the three variants of hypothesis. There are three different kinds of efficiencies that may exist in the financial market. The one of the types could be the weak form efficiency. The second type could be semi-strong efficiency. and the third could be very strong efficiency. So like, whatever topic, whatever kind of efficiency you talk about, like, they have got a different kind of stages. Some, like, say, for example, as when we were discussing with this Azim, and he was telling, like, say, for example, the fine Pakistani markets are a lot, like, inefficient as compared to the developed markets. So somehow, like, say, for example, if, like, in Pakistan, say, for example, the weak form efficiency exists. So like, in other kind of countries, there might be a situation that they might be having some kind of semi-strong inefficiencies or some strong efficiencies, basically, like, the strong efficiency, like, and getting a strong efficiency is difficult basically in the real world. But somehow, like, some country might have got semi-strong efficiency, and some countries may have got weak or very weak kind of efficiency. So what actually we mean by them, let's see. So, like, there are three kinds of analysis that you make when you go for a kind of, like, to buy a share. Like, say, for example, the first kind of analysis is a technical analysis. The technical analysis is what? The technical analysis, so, like, the technical analysis is what? Like, say, for example, you are calculating the earning per shares, you are actually calculating all the financial ratios of the company, you are looking deeper into the capital, I'm sorry, the financial statements of the company, you are actually looking deeper into this income statements of the country, and somehow you are getting or extracting information about the way basically this company has been performing over the years and what kind of prospects that company has in the future, right? So this is a technical kind of analysis that you make to decide about the investments or not investments in any company. The second kind of analysis could be the fundamental analysis. Like, say, for example, some of the factors are not particular to the company, but they are particular, or they are basically related to the overall economy. Like, say, for example, sometimes your stock market falls, not because the actually companies which actually are operating in the stock market are basically doing bad, but overall economic conditions are uncertain. Or say, for example, you have got political uncertainty, you have got some bad news coming for your whole country. Like, say, for example, if the international rating agencies are actually revising your, like, credibility downward. So like, that is a possibility that you basically have a kind of a situation when the stock market perhaps is falling. Like, say, for example, recently there has been a strong kind of events that basically have been about this FATF kind of a thing. Like, say, for example, we are getting into this, we are into this gray list, and can we move to the black list, or can we go to the white list? Can we remain in the gray list? So they're all basically the factors which might be related to the fundamental analysis. Another kind of, like, the decision or the information source could be the insider source. The insider source is the strongest kind of a source, but if any of the country basically can be beaten with fundamental analysis and insider information, that country has got weak form efficiency. If in any country you can beat the market and you can get higher returns on the basis of your ability to judge or guess about the fundamental situations or the fundamental analysis, or you are actually having access to the basic insider information, like, say, for example, again, as we were discussing earlier on, that you might have links with the companies and you might actually access to the companies, and somehow your relationship with the companies or kind of arrangements between the country's employees, like, say, for example, when they actually are investing into each other company's shares, in that particular instance, the insider information beat the market. If in your country, the situation is such in which this kind of information and the fundamental analysis of the information analysis of the situation can actually beat the market, but not the technical analysis beat the market, that is a weak form efficiency. All right. So if in any country the weak form efficiency exists, only you are actually in a situation when nobody can beat the market only on the basis of technical analysis. But he can beat the market if he has got more ability to actually, like, do the fundamental analysis, or actually has got the access to the insider information. All right. So the weak form of the EMH claims that trading information levels and changes the price of one volumes of traded assets, say, for example, stocks, bonds, or property, are already incorporated in the price. If weak form efficiency exists, If weak form efficiency holds, then in technical analysis cannot be used to generate superior returns. You cannot beat the market only on the basis of technical analysis, all right? Another form of efficiency that is discussed and that is studied in the financial markets literature is related to the semi-strong. As the name suggests, it is stronger than the weak form efficiency. And in this particular situation, the semi-strong form of EMH, efficient market hypothesis, claims that both prices, the prices incorporate all publicly available information, which also includes information present in financial statements and other Securities and Exchange Commission filings. If semi-strong efficiency holds, then neither technical nor fundamental analysis can be used to generate superior returns. So not only your information, the particular information about the company is good to make superior returns because everybody has got the access to that information. And also your information about the economy, like say, for example, being economist, you might have got a lot of more understanding of the economy, or you might foresee that how your economy is going to behave in the future and what kind of changes are going to come into your economy. Because if you understand economy, you can basically actually guess that how this economy is going to be in the future. So then if that also everybody has got not only the access to the technical details of a company, but also they have got all the understanding of the fundamental analysis, then your market is basically the semi-strong efficiency market. The stronger version of the efficient market hypothesis, it is the the highest kind of a situation where you might not be able to beat the market with any kind of analysis or any kind of information, all right? So the strong form of EMH, efficient market hypothesis, additionally claims that prices incorporate all public and non-public, which could be an insider information, and therefore even insiders cannot expect to earn superior returns compared to the uninformed public when they trade assets of which they have inside information. In case of the strongest form of efficiency, the people who even have got the access to insider trading or insider information, they will not even be able to beat the market or get higher returns on the basis of the inside information that they have. So thus, in an efficient market, all prices are always correct and reflect market fundamentals. So what are the implications of stronger form efficiency? First, it implies that in an efficient capital market, one investment is good as any other because the security prices are correct. If you are sitting or standing in a market where everybody is charging the fair price, it does not matter which shop you buy this from. You will be everywhere, you will be getting the right price, and that will be that will make you happy because you are getting the fair price everywhere. All right. Second, it implies that security prices reflect all available information about the intrinsic value of the security. तो जितने भी आपके प्राइसेस हैं वो सारी अच्छी और बुरी न्यूज को इनकॉर्पोरेट करके प्राइसेस हैं, यानी अच्छी न्यूज को इनकॉर्पोरेट करने की वजह से जो बढ़ने थे वो बढ़ चुके हैं और बुरी न्यूज को इनकॉर्पोरेट करने के बाद जो कम होने थे वो कम हो चुके हैं. सो दे आर रिफ्लेक्टिंग द इंट्रिंसिक वैल्यू. इंट्रिंसिक वैल्यू का मतलब होता है उसकी एक्चुअल वैल्यू. जिस तरह गोल्ड की अपनी एक इंट्रिंसिक वैल्यू होती है, डायमंड की अपनी एक इंट्रिंसिक वैल्यू होती है, इस तरीके से जो है इनकी अपनी वैल्यू क्या है. Third, security can be used by managers of both financial and non-financial firms to assess their cost of capital. So it's very important that you can exactly determine that what kind of cost of capital you are going to incur accurately, and hence that security prices can be used to help them make the correct decisions about whether a specific investment is worth making or not. So according to EMH, when you purchase a security, you cannot expect to earn an abnormally high returns, a return greater than the equilibrium return. This implies that it is impossible to beat the market. Okay. So if you look at the evidence in favor of the market efficiency, as we were having a discussion that what actually is the possibility of for the real world market to be efficient. So if you look at the evidence or the available kind of data, which may indicate the efficiency or inefficiency in the market. So whether investment advisors and mutual funds beat the market, investment advisors and mutual funds beat the market on the basis of information. If they can, it means that the markets are not efficient. If they cannot, it means that the markets are efficient. So what actually this, the research that was conducted, and this research was actually done to know that how likely is that for investment advisors and the mutual funds may beat the market. Like, they can actually be such who can actually access, or who can basically, have got the ability to earn more. Like say, for example, if everyone in the market is earning 10%, but some mutual fund is earning you, say, for example, 15%, it would mean that this mutual fund actually has got access to greater level of information, which other people don't have. So it means that they are making extra profits in the market, all right? So to test this, we can buy and sell recommendations from a group of advisors or mutual funds and compare the performance of the resulting selection of the stocks with the market as a whole. Other test is that the advisors' choices have been compared to the group. So you can compare which companies basically shares are getting you high returns, all right? So to advisors' embarrassment, the dartboard beats them as often as they beat the dartboard. Even when comparisons include only advisors who have been successful in the past predicting the stock market, advisors still don't regularly beat the dartboard. So what actually they found out